Well, hello. It's halfway through 2026. This is your second quarter update. So I'm going to sound like a broken record. It seems like, I keep coming to you and telling you the same thing about markets being concentrated, but they are. And if you look at what's going on right now, we've got a war on, we're off war, we're having a war, we're not having a war. It's crazy out there. Barrel of oil is going up, barrel of oil is going down. We got all kinds of different things going on. And it's difficult to manage money in an environment like this when you just don't know what's going to happen tomorrow. There's been a lot of unpredictable things, but what I do know is that the S&P 500 is supposed to be 500 stocks, but the concentration right now in the market is crazy. The top 10 stocks in the S&P 500 represent 40% of the entire index's performance. In fact, 24 stocks represent more than 50%. And that's because we have a lot of investment going into one sector having to do with big cap tech and AI, and all of that's going on is very concentrated. But if you look at the rest of the market, there are really good companies that are negative for the year. So it's really hard to get a handle on, other than being in the big cap, mega cap technology or the AI area, it's really difficult to try to pick and find the right companies. But I think we're doing a good job of that. But we do have a lot of cash right now. We're sitting about a third of our money is in cash or cash equivalents. And when I say that, that doesn't mean it's sitting idle. We've got things that are paying us, around 6%, maybe a little bit more, and they're not going to move around a whole lot, so that we have the ability, if markets drop, to jump with that money into the market and kind of coil the spring and ride that back up. As you know, that's kind of my style of what I do. But I'm going to have Andrew talk to you the rest of this particular update. I'd like him to talk to you about SpaceX, because everybody's asking about SpaceX. So I'm going to let Andrew take over and let him start to explain SpaceX.
Thanks, Dad. Yeah, SpaceX, the most common phone call, email, text message that we've gotten over the last 40 days or so since it IPO'd has been, when are we going to buy more? When are we going to buy it? Et cetera, so on. It's been all SpaceX all the time. It's all people want to talk about. And I get it. It's a very hot IPO, and it has the potential to be, one of the most valuable companies to ever exist in perpetuity. But at its current valuation, it's a little bit crazy. It IPO'd at $1.77 trillion without anywhere near the revenue that it needs to support that valuation. It's not Apple or Nvidia where they're making money hand over fist more than they're spending. SpaceX is spending more money than they're making right now. That's not a bad thing, but it calls the valuation into question. But as far as when to buy it, there's some technical pressures that are going to go on underneath the surface here. When the stock IPO'd, 4% of its shares were released to the public for trading. So that means that they issue 100 million shares in total. 4 million of them were given to the public to trade. I'm just using fake numbers here to make the point. The rest of the shares are owned by insiders or Elon Musk. When their earnings for quarter two are released, an additional 8% of the total shares released for sale from insiders. Insiders are now allowed to sell those to the public. That means that the amount of available stock to trade will triple, but 2/3 of the available stock to trade will not be people buying it. It will be insiders looking to sell their stock and solidify and capture the wealth that they've now gained by the stock going public. That's okay. That's good for them, but not so good for the continued price of the stock. So with that pressure, and with 40% of the total shares will unlock by December 9th, it's just not the right time to buy it. It's going to take some time, but the stock price should come down significantly, or at the very worst, it should kind of stay in the area where it is. We're going to own it, but we're not going to own it at this price. It's just too rich for our blood where it is. But we'll see what happens going forward.
And I'd like to interject that if it goes to $1,000 a share, none of this really matters, and we know that. and it probably will do that at some point in the future, and not the near future, but in the future. But what we're trying to do is we're trying to be, value buyers and buy it when it makes sense. And I don't think it'll ever be a value, but at least it'll get to a position where it makes sense that we can stomach making because we want to own a good portion. We don't want to have an undersized position. We think this is going to be a fantastic company. I mean, when I see them take a rocket, shoot it into space, let it flip around and come back and they catch it on the landing pad, that's amazing. So anyway, we're going to come back to you again at the end of this quarter, and we'll talk to you again. The only thing that we can tell you at this point is that, we're halfway through the year. We're happy with what's going on, and we feel like that we've got a handle as much as we can get one as to what's going on. So we'll see you again next quarter.